Assalamu alaikum students, a very warm welcome to the students from all over the world. On behalf of ACCA, I welcome you all. My name is Mia Saad Muhammad and I'm your tutor for the Advanced Taxation webinar today. So we'll start with the quotation of Albert Einstein. The hardest thing in the world is to understand the income tax. The reason why I have shared this quotation, because the major chunk of our advanced taxation exam gets tested from our chapter called income tax. So we'll see that at the end of this session, will you be agreeing with the Einstein's quote or not? So I'll start with my introduction first. Before that, if I can request everybody to raise their hands using the raise hand feature, that they can hear me clearly and they can see my screen as well. Thank you, Talha. Ali Heather, thank you. Thank you, Mariam Zan. Thank you. Okay, guys. So let's start with the introduction first. My name is Mia Saad Muhammad, and I am a member of ACCA. Along with that, I am a registered mentor of Oxford Brookes University. I am a tutor of advanced taxation and advanced audit at one of the approved gold earning partner, that is LGS Defense International Degree Program Lahore. I am teaching since 2016, and my specialized areas are advanced audit and advanced taxation. One of my students achieved a nationwide distinction in 2017 and 2019 exams. So, guys, before I start with the paper pattern and other things, I want to let you know by sharing one thing so that you can realize the significance of these webinars. I've conducted these webinars in 2019 as well. So at the ACCA website, the recording of those are available. One of the students contacted me after they have appeared in the exam. The webinar are always scheduled before the exam. So one of the student contacted me after the exam when the results are even published, and she said that, sir, I am from Saudi Arabia. I have taken your webinars and I have achieved a nationwide distinction. That was in 2019, March 2019. So with that, I realized that the webinars can be that much helpful that a good student can use them to achieve good marks, and a mediocre student can get help from those and achieve a pass grade. So I hope that you will take these webinars seriously, and with your feedback I'll try to make it more helpful for you. So guys, I always start first with the paper pattern. As you are well aware of the paper pattern, there are two sections in the exam. There is a section A worth of 60 marks. In that you'll be having two questions, and then there'll be a section B with 40 marks. Now, in section A, the first question will be on 35 marks and the second question will be on 25 marks. The examiner has clearly stated that in section A, 5 marks will be tested from ethics. He has given clear instructions that either in question number 1, that is of 35 marks, or in question number 2, that is of 25 marks, there'll be a 5-mark part related to the topic or the chapter ethics. Now, all of you have studied the ACCA audit papers, that is F8 or F6. You might be well aware of the ethics. If not, I have made my notes that are shared with you in the handout section. In that, I have a separate chapter for ethics. In that, you'll be easily find out that how many scenarios can be tested in ethics in F6 or in ATX exam, and what you should be writing when a particular scenario gets tested. So do remember that there are 5 marks for ethics, and then there are 4 professional marks that will always be part of the 35-mark question. The professional marks are for the pattern of either the briefing notes or the letter or the memo. 2 marks are for that, and 2 marks are for the layout, that how well explained or well constructed your answer was. So ACCA also runs a series called Read the Mind of the Marker. I've been honored by ACCA to conduct at least 3 to 4 times of those sessions. These are, 1 hour session in which ACCA invites examiner, and examiner shares as to how the markers think. So I've conducted this session 3 4 times, and I've tried to explain students that in section A you have show short 9 marks that you can easily take, 5 marks of ethics and 4 marks of professional. So these are in total 9 marks, which means to pass out of 50, you have already taken 9 marks. It makes your question, it makes your passing chances very brighter, very, confirm that you can easily pass the paper. Now, what I'll be helping you with this webinar, I'll be teaching you as to how you can take those easy 5 marks, number one. Number two, those 4 professional marks. And how I have scheduled my webinar, I'll be discussing this with you as well. So let's start with the section B first, then I'll tell you the more break in detail that what is section A and what is section B, and what are the topics you should be expecting that gets tested in that. So in section B, there are 2 questions worth of 20 marks. There used to be a choice, but that is no longer available. So both questions are compulsory. So there'll be in total 4 marks. If I discuss with you in detail, the section A, the 35 mark question normally gets tested from individual taxes. Now guys, for those of you who are appearing in the advanced taxation exam for the first time and have passed the taxation exam, please do remember that there is a lot of difference in advanced taxation and taxation exam. That advanced taxation exam is more of tax planning in nature rather than the computational exam. Now, what do I mean by that? In advanced tax, the examiner expects you to be at the level of a tax manager whose job is that when the clients comes to the office, you have to advise them on certain matters and tell them that with the help of your advice, how much tax effectively they can save, because obviously that is the purpose they came to you. So if you're just going to give them the advice and not tell that how much tax they will be able to save in result of your advice, there is no point of providing them the advice because they haven't got what they came for. So do remember that whenever in tax you're explaining something, you have to imagine that the client is sitting in front of you and you're trying to explain him. And do remember one thing, that client is a layman. He's not a student of advanced taxation or the ACCA, so he does not know. The reason he came to you is that he does not know about taxes and he want your help. So you have to explain him and explain it in such a way that a layman can understand that what you're trying to say. And do remember, the client is only concerned about how much tax he has to pay. Number one, will he be able to save any tax in the result of your advice? Number two, and number three, after paying the amount of tax that you've advised that he has to pay this amount of tax, how much money he'll be able to get. For example, if I'm selling a car, I don't know that how what kind of tax one has to pay on car, and especially on my car, the price it has, the model it has, I don't know what kind of tax yeah, one needs to pay on that. So if I'll go to the tax consultant, I'll be concerned in if he can answer my question, how much tax I have to pay. Can he advise me something in any way or any relief due to which I can reduce my tax? Number two. Number three, can he let me know that after selling my car and after paying out the tax, how much money I'll be left with? And that's what you call after tax proceeds, the money that is left after paying of the tax liabilities. So guys, do remember, in all of the paper you have to remember these 3 questions in mind of the client. That is why he's came to you. And in advanced taxation, you'll always receive an email from your senior that the client has asked for this and this. Now In taxation, you're normally confined, or the question is normally confined on one sort of tax or one type of tax, either income tax, corporation tax, or any other. However, in advanced taxation, you'll never see a question focused on a single tax. There must be some point of other tax, especially in section A. Examiner always tax the question on multiple taxes. So the question number 35 will definitely be either 2, 3, or 4 types of taxes. It can never be tested on one type of question, one type of tax. So normally what I have seen is the question number 1 comes from individual taxes, and when I say individual taxes, I mean the taxes that is applicable upon an individual, which means income tax, because if one earns any sort of income, he has to pay income tax in the UK. Capital gains tax, if one sells something of capital in nature and receives a gain on that, he has to pay capital gains. Number 3 is value added tax. So if one is in a business and sell item that is taxable and on which as per HMRC the VAT needs to be charged, then VAT. Fourth is, and the last that applies on an individual, is inheritance tax. If the one has received something in inheritance, he might has to pay tax on that. Or if he is giving something to someone in the way of inheritance, then he might have to pay some tax on that. So these are the 4 taxes that applies on individual. However, on companies, there is only 2 types of taxes that can be applicable. The first is corporation tax, because company pays corporation tax on his earnings, on its earnings, and on its capital gains. On both, it pays the same kind of tax, that is corporation tax. Our individual pay income tax on income and capital gains tax on capital gains. So individual has to pay 2 different types of taxes for these 2 different types of income. However, for companies, it is simplified that they pay corporation tax on both of them. Now, as far as value added tax is concerned, it is the only tax that is applicable upon both, whether the individual or the company. Because if you're selling something on which VAT needs to be charged as per HMRC rules, whether you're a company, whether you're an individual, you have to get registered for VAT. So the VAT is the only tax that is applicable upon both. So when I talk about, or when I say individual taxes, 4 taxes should come into your mind: income tax, capital gains tax, inheritance tax, value added tax. And on corporations, corporation tax and value added tax. Now, as part of the corporation, as part of the company, being a shareholder, a question can be tested in which you have to discuss both of the aspects, the company's aspect and the individual aspects. So we'll talk about this later in detail, that what kind of these questions are, and I'll solving a few of those questions with you as well. So do remember that question number 1 normally comes from individual taxes, that is usually the income tax has the biggest chunk out of those, then the CGT, and then the inheritance tax. So what can happen is, there's a client, he comes to you and he needs certain advices for his income tax matters, for his capital gains matters, and for his inheritance tax matters. But you have to remember that there must be a 5-mark part either in question number 1, if not then question number 2. But there needs to be a 5-mark part in section A. Do look for that because it is pretty easy, and 4 professional marks will always be part of 35-mark question. Now, to confirm my this philosophy that you should focus on these 9 marks, the examiner has written, the ATX examiner has recently written an article called Read the Mind of the Marker, a very good article which I'll be discussing with you in the last session, so that I can tell you that as an examiner what he and his team will be looking for. Okay, now if I talk about question number two normally gets tested from CT plus VAT, that is corporation tax plus VAT. So if you, the recommended study material that I recommend you to study is the Kaplan's Advanced Taxation Exam Kit. So if you use that, there is a separate section for corporations in which the questions related to corporations are given. If you analyze that carefully, Majority of those questions are worth of 25 marks. Why? Because to test corporation plus VAT, the favorite question of the examiner usually is question number 2. But sometimes he tests the corporation tax in 35 marks question as well. So I'll be doing 235 mark question with you on day 4. One of those will be on individual taxes and one of those will be on corporation tax. So you'll have an idea as to how the both taxes gets tested in question number 1. As far as the section B is concerned, they can be tested on any part of the syllabus. However, the most common, you can say, the merger of taxes for section B is inheritance tax and capital gains tax. Now, in F6, you are not supposed to know the connection between them and what happens if there are implications of both taxes, what are the circumstances, and both tax has some implications. But in advanced taxation, you're supposed to know that. So there's a separate section in Kaplan Kit called capital taxes, and there are a lot of questions in that. And if you carefully analyze that, most of them are for worth of 20 marks. Why I'm telling you all this? Because if you do not know the dynamics of your paper, which topics gets tested in which question, which topics you need to carefully study, you will not be able to succeed. So that's why I'm breaking the paper into smaller chunks for you. Now, let's talk about the pass rates. The amongst professional papers or the optional papers, I would rather say, P6 has, or the advanced taxation exams has, comparatively better pass rates. And why is that? Because when it comes to optional exams, it is more easier to pass. However, it is the most syllabus intensive paper. The syllabus of it is quite long or lengthy. So that's why it is difficult for you to remember that amount of rules, but I'll be helping you to tell you some tips and techniques that how you can learn. Now, common reason of failure in the advanced taxation exam. Guys, despite of being a popular optional exam, candidates that mostly fail were due to poor exam technique or the poor understanding of the requirement. They are unable to understand what examiner is trying to ask. Or the third one is the most common in P6, that their answer lack details. They do not answer each and everything that has been clearly asked by the examiner in the requirement. When I'll be solving question, I'll try to teach you the trick that you can use so that you can make sure that you have answered every bit of the requirement. And the in P6 or the advanced taxation exams, you have to keep thinking that how can I apply the guidance to the scenario, because the max you can relate to the question scenario, the max marks you can score. Then the poor time management, and we'll be discussing that how this can be more of an issue because this is the first time that the students are going to be sitting computer based exam for the advanced taxation exam. You some of you might have sat in the advanced taxation exam when it was offered as an on demand CBE. However, most of you will be sitting for the first time in the CBE. So when the exam was paper based, even then students were, faced with poor time management issues. So now it is CBE, so this will be one of the biggest issue. So I'll be trying to teach you the tips that will help you to manage your time, especially considering that the exam is now CBE. Also, in my session, I'll be primarily focusing, apart from syllabus and question practice, I'll be primarily focusing on two things. Number one, you should be aware that the Finance Act has been changed like every year, and in June 2021 advanced taxation exam, Finance Act 2020 will be tested. So the students which are repeating the exams in June 2021 must be aware of the Finance Act changes, the changes in rules and regulations, because I'm giving you a pro tip that whenever the Finance Act gets changed, there'll be new rules, there'll be changes in the syllabus, and these are the ideal topics for the examiner to test so that he can make sure that are the students aware of the changes. So for you, it is a tip that if you prepare those changes carefully, you'll be able to succeed. Now, the first thing is finance act changes that I'll be primarily focusing on. And the second thing is to teach you the tips and techniques. With that, you can practice more and more on the CBE platform because the exam is computer based. And most of you might not have appeared in either any of the CBE professional exam or at least not appeared in the taxation exam. Now, finally, I would like to share my schedule for this session. It is a 5-day session. Each day I'll be focusing on particular topics. Its duration is 3 hours. Daily, we'll be focusing on exam practice along with the two things, that is CBE and finance exchanges. So, how you have to revise that? I have shared a handout that are my notes which I usually share with my students where I teach. So you can download those notes. They are quite summarized, and in that the changes or the text that is highlighted in yellow are the finance changes. Apart from that, I want to teach you one more thing. I'll share my screen with you. If you go into ACCA's website, click on ACCA qualification after coming into the study resources. Do remember, after coming into the study resources, click on ACCA, then select taxation exam, not the advanced taxation exam, taxation exam. Click here, then click on technical articles. Out of that, select Finance Act 2020 article. It is a very good article, but it is more detailed in taxation exam because in advanced taxation exam, the more advanced changes have been highlighted there. And when you click on the finance act changes article of ATX, it gives you a pop-up that before reading this article, you should read the taxation version of this article. In this article, you will find one of the best summaries of the finance act changes, which I'll be discussing with you as well. So if you click on that article, it will quickly take you to the finance act changes, and the examining team has divided the changes in sections. That is, first you'll find income tax, and beneath that you'll find the changes in income tax, then capital gains tax, then inheritance tax, and then so on, VAT and corporation tax. So it is a very good article. Everybody must read this article, and the good thing is that it has examples in that for which the solution has also been provided, so you'll immediately understand what the examining team is trying to tell you. Every ATX students shall read that. It is a must. Now, guys, I will stop here before I move on. I would request you that there's a question section. If anybody has any questions, they can put their questions below there, and I'll try to answer as much as possible, and then we'll start with the questions. How much VAT topic is important? ATX very important. You should expect a good chunk of VAT in every exam, Sayyid Hassan Noshad. So VAT is a must. I got exemption in tax, then Sayyid Noshad, you have to work very hard, because I've seen this, that the students that have received exemption in tax, they struggle a lot if they have straight away come into the advanced taxation exam. So for you, the taxation article is a must. Okay, is it applicable? Yes, you should read the both articles, Mohammed Haris, but first you should read the taxation version of the article. From where you can download the ATX notes from the handout section in this webinar. Okay, sir, using table format or Excel. I'll teach you this, Bhavik, when we'll be doing questions. Yes, you can see the questions. I'll be sharing the question with you. I'll be sharing my screen with you. Christina. Okay, Lavish, you are setting the exam for the second time. Uh, Lavish, there is no specific time. I can tell you that you need 2 months, 3 months, this amount of hours. There is no fixed time. It depends person to person. So it depends upon you. Is there a WhatsApp group, Pearl? No, there is no WhatsApp group. However, you'll be having my uh, a link to my Facebook page. You can write your questions there and I'll try to answer them. Yes, Sayyid Hassan, a study text and my notes are ample. Okay, guys. So now I want to tell you another thing, and that is how many of you are aware of the that ACCA has a CBE practice-based platform? How many are you of aware? Okay, Sayyid Hassan, you know the platform. That's very good. For all other students that don't know that a platform exists, I'll be sharing the link to that platform. And what I've done is I've intentionally selected the questions from the latest attempts with which the which are not only updated to the Finance Act but they are available on platform. Why I have done that? The reason is that I know that the exam is CBE, so I want to keep everything close to CBE. Okay, Shazad, let me show you, let me guide you how you can find out the practice platform. If you go into the study resources part of the ACCA website, click on ACCA qualification, then select advanced taxation. In that, if you scroll down, you under learning and revision heading, you have an option called CBE question practice ACCA practice platform. Click on that. If you scroll down, you'll have a link called login into the practice platform. If you click on that, it will take you to a page where you have to enter your MyACCA ID and passcode. Then click sign in. It will open a page similar like this. I have already entered my username password. Now, from the right, select advanced taxation as your exam. Then select variant, that is UK variant. Then click on ACC official resources. Then click past exams. Now, what ACCA has done, they have done a tremendous job that they have upgraded 4 past papers, full-fledged past papers to Finance Act 2020. They have adjusted that to the Finance Act 2020 and they have uploaded it as a CBE exam format, just like you'll be having in the live exam. So here it says unassigned, but in your case, it will show the option called assign. So when you click on that, it will appear on left side as an exam. Now, here you can see that if I click on ATX UK past exam paper, I have assigned 3 of the past papers or all 4 of the past papers to myself. Now there is a latest September-December 2020 attempt that has been upgraded to the Finance Act 20 as well. And the last 4 attempts have been upgraded to the Finance Act as well. And if you click on that, in your case, it will be showing as start. In my case, it is showing resume because I have already started this exam. If you click on that, it will open the exam platform. The real exam will exactly be like that. In the first few slides, you'll be having the instructions. Read the instructions carefully at home. So when you go into the exam hall or when you'll be sitting into the exam hall, the instructions are already been, you're already aware of the instructions. So you don't have to spend your precious time there. Now, there's an option called navigator at the bottom. If you click on that, it can directly take you to the question. But for the first time, you have to read the instructions. If you resume the exam, only then you'll be straight away be able to navigate to the question. For example, in my case, if I want to check a section B question, let's say, let's click on question number 4. It says that first you have to scroll down. So you have to scroll down the page completely before you navigate. So it has taken me straight away to question number 4. Now, there's an option called strike through with which you can put a line on the text like I have done there. Then there is a highlight option with the help of which you can highlight any important bit if you want to highlight. You can unhighlight that as well. Then you have the scratch pad in on which you can write your rough notes while reading the question. I'll teach you how to do that. Then you have an on-screen calculator as well. You can drag that, scroll down, and by pressing the keys on your keyboard, you can write on them. You can see there. You can close them, and you want to, if whenever you want to open them, you can. The tests are there for you to attempt as many times as you want. You can later on mark your test yourself. The solutions are also available on the ACCA website. How you can access the solution? Once you attempt all your question and you're on the last page, there is a option at the left bottom corner called End Exam. If you click that option, your exam will come from Home section to Mark section on the top. Then you click on Mark, and then you'll have the exam available here. Then you have to click on Self Mark. So the exam that you have submitted will be available here with your solution. And for any question for which you want to see the standard solution, there's a section called click here to see the sample answer. When you click here, the answer will open in a tab there, which you can increase the size of it according to your convenience. Scroll down and look at the answers. So the answers have been upgraded to the finance sector as well. Now guys, only those students please raise hands who are not aware of the practice platform before. Okay, so I'm glad to see that there were not that many. So most of the students are already aware. That's good, guys. So it's good to know that you guys are taking the exam seriously and you are aware of the changes. Now, can those students raise hands who are aware of the Finance Act changes? That's good. Okay, raise down your hands. Now, if I would like to request students who are repeating the exam to raise their hands. I can see that there are quite a lot of students that are repeating the exams. Guys, for you, it is very important to get to know the changes in the finance act, especially for F6, because especially for the advanced taxation, because the changes that are in advanced taxations are difficult to understand because they are sort of tax planning in nature. So I'll be helping you in that. Okay, now let's discuss as to how I have designed this session and what questions we'll be doing that. So you have a question wise plan in the handout section that I have shared. The first day I have dedicated to capital taxes, from which I expect that a 20 mark question will be tested. And then when I talk about capital taxes, it means major chunk of the question will be from inheritance tax and capital gains tax. Now, in day 2, we'll be discussing multiple tax questions, which will not be focused on any particular tax. However, they will primarily be focusing on individual taxes. On third day, again I have selected multiple tax questions. They will be focusing on individual taxes. I have selected the questions in which there are topics tested which I think that student finds normally difficult. So what I'll be doing is, after reading the requirement, we'll consult my notes, we'll study the topic from there, then we'll come back to the question and solve the question. I will be solving only the computational parts with you on the spreadsheet, so I can tell you what are the formulas you can use, how you can make your computations more attractive. And the written part or the theoretical part, I'll be discussing with you. I'll be teaching you that what points your discussion should include. Now, on the fourth day, as I told you before, I have dedicated for a 35 mark question. I have selected a question that is the very latest attempt available, September, December 20. I have selected the question called Lamar from that, and then there is a question called Grand. So the Grand question is on corporation tax, a 35 mark question, and Lamar is on individual taxes. I will be also discussing the Read the Mind of the Marker article on day 4 with you as well. Then the fifth day I have dedicated for the corporation tax and VAT. However, the questions that I have selected in the first 4 days will include a part of corporation and VAT here and there. However, the day 5 will be focusing primarily on the corporation tax and VAT. Why? Because I expect that always there is a 25 mark question that normally gets tested on corporation tax and VAT. So before I start the question, I would like to see that if there are any questions that are left unanswered, so I can answer that. Then we'll have a 5-minute break and then we'll start. Okay, should we go through to the Kaplan book or the notes are sufficient? Okay, Sati Shabaji, I'll advise you to go through the notes at least once, but your more focus should be on the Kaplan kit, because if you'll be keep reading notes or books, you'll not be able to understand how does the question test these topics. So if you want to learn after reading notes once, your primary focus should be Kaplan kit. Okay, Sherian, where do you write questions for him to answer? If you can ask a question again, please. Here, how can we find the answers to these? Mohammed Aris, I have now explained that how can you find the answer to these. Have any of the paper exams answer been updated to Finance at 20? Christina, as I have shown you on the screen, that there are 4 papers for which the ACCA have upgraded the answer. However, you won't be able to download that updated answer by clicking from or by visiting the past exam paper section. They are not available there. If you want to see the updated answers, you have to first solve the exam or just open the exam, then go to the last question, end the exam, and then the exam will be shifted into mark section. Then click on self mark, and from there you'll be able to find the answers. And there is another technique, that if you're using Kaplan kit, you will not be needing past exam papers, because paper like tax, the student always use kits because the tax rules gets updated. So the questions in the kit are always adjusted to the latest Finance Act. Carla, no, you don't get the scrap paper. However, yeah, in the exam center, ACCA may provide you pen and paper, but if don't, you have the scratch pad there. Can we use the physical calculator in exam? I think yes. However, ACCA can answer you better on this. I did try last year, but there was no question. Yes, Akil, this year the ACCA has done a star job. The questions have been updated, so you can now. We are studying the new finance. Yes, we are Mohammed Haris. We are studying the new finance sector. Yeah, yes, Akil, the questions are in the Kaplan exam kit. Sherry, I'll try to give you as much questions as possible. Otherwise, you have the Kaplan kit available. You can try to you should try to solve as many as you can. Unless the recommended material is Kaplan. Obviously, for tax, always Kaplan. Mohammad Aris, if you go into the P6 exam at ATX exam section, there you have an option called technical articles, and in there you can find the practice to pass web, read the mind of the marker, or I'll share with you the link. Extent to extent of knowledge about Excel for ATX exam, Muhammad Abdullah. You do not need to be a pro in Excel or spreadsheet. Just basic knowledge will be suffice. Akil, yes, but I will not suggest that you keep redoing questions. However, what I'll suggest is everybody has laptops and they have Microsoft Excel in that. So open the question in hard copy from Kit in front of you and try to solve new questions on spreadsheet. Okay, Shiri, I'll not be sharing my webcam to utilize the maximum bandwidth now till the end of the lecture. Okay, guys. Now, let's start with the question. The first question that I have selected is Akila and Damia. It is from September 18 attempt. And rather than solving it through stylus, this year I have opted to solve it on the Excel. So what I'll be doing is I'll be reading the question with you, and then we'll study the topics that are tested from there. From my notes, I'll give you the reference, where are these topics mentioned in my notes, and then we'll solve the question. So before I move on to the question, we'll take a short 5 minutes break. Okay, guys. So I hope everybody is ready. If you can quickly raise your hands and give me a go ahead so I can start. Okay, I can see that we have a good amount of attendees today from all over the world. Okay, guys. So let's start with the question. September 18 question. I have uh, solving this from the practice platform. ACCA requires advice on capital gains tax and inheritance tax. So you can clearly tell that it is a section question from capital taxes section. Implications of gifting warehouse to his daughter. Okay, so I can at least know that what he's trying to ask here. Gifting a warehouse to his daughter Damia. So Damia is his daughter. He also requires advice on tax consequences of a company in which he is a director and a shareholder. So what I quickly remember is that whenever someone is a director and shareholder of a company, I have to closely monitor that is it a closed company? Okay. Of its disposal and acquisition of certain capital assets. Okay. The following exhibit available on the left-hand side of the screen provides information relevant to the question. The first is scenario and the second is a requirement. Guys, I'm giving you a tip that always read the requirement first. Although the exam in the introductory paragraph, you are able to know that what will the requirements be. It will be on CGT and the IHT, but still I'll be reading the requirements first rather than the scenario. You can drag the requirements anywhere you want to. In respect of the proposed gift of the warehouse, okay, on 2021, dates are always important. You can highlight them as well. Explain why CGT gift relief will be available. It is only for 2 marks. So if one has a good knowledge of gift relief, you can easily score good 2 marks here. Explain with supporting calculations the effect of making a gift relief claim in respect of the warehouse on the total CGT liabilities of Akin and Damia. So if they'll be able to claim the relief. And the question is giving you the hint itself. Explain why the CGT gift relief will be available. It means that gift relief is available. That is why he's asking us why. So all we have to tell is the reason, but the gift relief is available. And in the second section, he says that if they claim the gift relief by making an election, what will be the resultant CGT savings that they'll be able to realize. Now, that is what I have told you that whenever the client comes to you, the client is always looking for three things. Now what I'm doing is that apart from teaching, I also run my consultancy, and in that I provide tax consultancy to UK clients as well. So I can tell you with my practical experience that whenever client talks to me, all he's concerned with is that if I can answer his question or his queries in as precise as I can. And the second is if I can tell him that will he be able to save tax as a result of my advice. So that is why, or that is what the examiner is expecting from you guys in the questions as well. So even if he has not mentioned, you should have told him or you should have to tell him the CGT savings or the tax savings that would have been resulted or realized in due to the gift relief. Now, three, advise on the availability of business property relief, what we called BPR as well, for IHT purposes if Akil dies before 1st October 2028. So now, if anybody has the basic knowledge of BPR on what type of asset is it available, so they can easily score good 5 marks here. And I always try to solve latest attempt question with the students so that they can see or analyze that what examining or what type of question examining team are testing nowadays. So it is not that old question. You can see it has small requirements, and whenever you see a 20-mark question, you'll always see that there must be 3 to 4 short requirements rather than a big requirement. It is very easy to score marks in 20 marks question. They can help you to pass your paper easily. So please carefully focus on 20 marks question because they'll not be having lengthy requirements. they'll be easier to understand, they'll be easier to answer, and they'll not be time consuming to answer. Even if the exam is CBE and you do not have super typing speed, still you can easily answer these questions in the given time, because in ATX the examiner does not expect a very detailed answer. He expects precise and to the point answer. For example, maybe 5 one-liners, bullet points will be ample for a 5 mark question. Okay, so you will not be expected for very detailed answers here. Even if you read the exam standard answers, even they are not that detailed like other theoretical papers. Then in part B, explain with supporting calculations. So I'll highlight BPR here because it is the crux of the requirement. Explain with supporting calculations the amount of after tax proceeds. I told you that the client is always interested in after tax proceeds, how much money he'll be able to saved after paying all the tax. And why is that? For example, I've given you my example of the car, that I have some car and I want to sell it and I want to know what kind of tax will be applicable on that and how much tax will be. The reason I am concerned about that is the after tax proceed, that what money will left to me after selling that car, so that I can plan that what car or which car I can afford the next, according to my budget. So the reason the people are concerned in after tax proceeds are because they have to take some financial decision basis of the funds they have, they're gonna have after paying the tax. So explain with supporting calculation the amount of after-tax proceeds which will be available from the sale of the fixed equipment and the tax consequences for both Spydra Limited and Basir of the gift of the motorcycle. Now we don't know that what Spydra is and what whose Basir is, so we have to read the question for that. But what I know is that they are concerned with the after-tax proceeds which will be available from the sale of the equipment. So they're going to sell some equipment. Okay, and the tax consequences for both Spydra and Basir on the gift of motorcycle. So I have to see who Basir is, and then I'll think about that, uh, what happens with the motorcycle gifts. Now I'll click on the scenario and I'll start reading the question. Guys, I have intentionally focused and given time on the requirements so that you must learn the art of reading the requirements. The student who knows how to read the requirement will be able to read the question quickly and will be able to answer that what the examiner is looking for better than the others, so which will increase your pass chances. So let's zoom this so you can have a good idea. Okay, guys, if you can quickly raise your hand and tell me that you are with me till here and you can clearly see the question on my screen. Thank you, guys. Now, Akil and Damia are both resident and domiciled in the UK, are both high rate taxpayer and relevant taxpayer. Now, these lines are very important, guys. Reason being that whenever I'll be calculating CGT, I have to understand or learn that I'll be multiplying it by 20% or 28%, which are the higher rates in CGT. Now, both makes both make disposal to fully use their annual exempt amount of CGT each tax year. So again, a very important point. So I must know that when I'll be calculating the CGT, I'll be ignoring the annual exempt amount because they always use it. Akil is a director of 50 is a director and 55% shareholding in Spydra Limited, a UK resident trading company. Will give a warehouse building to his daughter Damia on 1st October 2021. Okay. So Akil is a director and a shareholder in a company, and he's gifting an asset. So the question related to the gift relief. Now I'll take you to my notes that have been shared in the handout section as well. Rather, let me open them in the Word. Now, if you open my notes, I follow a different section as compared to the Kaplan study text. I always teach inheritance tax first, then the capital gains tax, and then income tax, and then value added, and last I teach is corporation tax. So you'll find the second chapter as capital gains tax. In that, we are looking for gift relief. So hold against gift or gift relief are the name of the same relief. Now, when is this relief is available? If it is available, if somebody gifts something to someone which is actively being used in their trade, and the donee will also be using the gift in their trade. Now, what is the difference between donor and the donee? Donor means the person who is giving the gift. Donee is the recipient of the gift. Okay, so both the donor must be using that asset actively in the trade. Any assets that are not used in the business and you're gifting them, there is no gift relief available. So do remember, gift relief is a relief that is only available on the gift of assets that are used in business assets, not private assets. For example, if you gift someone your house, your car, the gift relief will not be applicable. The gift needs to be used in business by the donor, and the recipient of the gift, donee, should also use that gift as a business use. For example, if they start using that gift privately, they have to pay the tax. Now, when you're studying advanced taxation, you have to understand the rationale behind the rules that HMRC has found, so it will be easier for you to learn. The reason is that HMRC wants to promote the trade. So HMRC does not want to annoy people who are trading and they are gifting the asset that one is using in their trade and the next one will be using in their trade. So HMRC does not want to interrupt business people. So they're allowing them that if one is using the asset or the equipment or whatever it is in trade and the second person will be using it in trade, they can elect that they can defer their gain. Whatever the gain arises today, if they would have sold in the market and on arm's length, they can defer that gain. The donor does not has to pay any tax. Now guys, in gift relief, the main advantage is for donor. Why? For example, if I have a machine that I'm using in trade, if I sell it in the market on its arm's length, it is not of depreciating item, so its value has increased since I have bought it. So let's say I've bought the machine for 10,000, now it's worth for 12,000. If I sell it in the market, I'll be able to realize a gain of 2,000, and on that I have to pay to the HMRC this capital gains tax on the 2,000 gain. However, if I gift that asset to someone, I will not have to pay any tax provided certain conditions. I will not have to pay any tax, and the donee will not have to pay any tax as well immediately. There will be some tax implications later on, but at the time of gift there will be no tax implications. Now, how does the gift relief works? For the gift relief, as I told you that a person should use the asset in their business, and if the asset is of their unquoted trading company, unquoted means private limited, it is not a public listed company, the person must shall hold at least 5% holding. So guys, if you see in the question, the Akil fulfills both of the conditions. He is more than 5% shareholder, he has 55% shareholding in the company, and the warehouse that he's gifting to Damia, his daughter, has been used in the business purposes. It is available, this information is available in the next point. The warehouse has always been wholly used rent free Spider Limited since that date. There you can see. So we have to check that if Akil's company have been using this asset throughout their ownership period for business purposes, the gift relief will be available on the entire amount of the gain. However, if the Spider Limited, that is Akil's company, has not used the asset throughout the ownership for business purposes, but they have used the asset for significant amount of time for business purposes, the relief will be time portioned. Now, how the relief will be time portioned? We can mostly time apportion it over the months. For example, if I have owned the property or the warehouse for 5 years, that is 60 months, and out of that, for 4 years, I have used it for business purposes, and 1 year I have used for private purposes. So the gift relief will be restricted by multiplying the total relief into 4 divided by 5 or 48 divided by 60. So you have to check only two things, that the asset has constantly been used in the business for the business purpose. If not, then you have to time portion the gain. So we'll see in this question that what is happening, but I have given you a brief overview of what a gift relief is. Now, do remember that gift relief is not automatic. HMRC will not be able to know unless you notify them that you guys are claiming the gift relief. So HMRC needs to be notified. Okay, so whenever you talk about reliefs in ATX exam, always mention that these are the leaves that are automatic and needs not to be claimed if there are. And if the relief needs to be claimed, please do mention specifically to the client that this is the relief that you have to claim from HMRC, and also mention the deadline. I mean, this is what we do when we are talking to the clients in real life. When they come to us and we suggest them that they have to do this and this, we then tell them that out of which of these points they have to notify to HMRC and what are the deadlines of other points. And same you have to do in when you'll be writing the answer of the questions in ATX exam. Okay, so now I've told you the criteria of the gift relief. So let's back to the question. Akil is a director. Okay, will be given the Akil acquired the warehouse on 1st July at a cost of 62,000. The warehouse has always been wholly used rent free by Spydra Limited since that date. So you can see that Spydra Limited is using the house for the business purposes. The current market value of the house warehouse is 195. So guys, you can compute the gain here from here. Now, without reading the question further, can I answer the question of part A? Yes, I can. He has asked me explain why the gift relief will be available. And as the number states that there are 2 marks available, I'll be writing 2 points. I'll be writing that the gift relief is available in respect of the assets that are used in business by the donor and donee, and the warehouse has been used by Akil in his company throughout the ownership. Number one. Number two, to claim the gift relief, Akil needs to have more than 5% of the ownership of his company before making the gift, which he has. So therefore, by satisfying these two conditions, Akil and Damia can claim a gift relief on the gift of warehouse. So the part A has been answered. Now, let's talk about part B. Part B was on CGT savings, I guess. So for that, I have to read the questions in full, and then I'll be able to understand that what kind of savings will they be making on that. So Damya will use the warehouse solely in her sole trader business. She'll be using that as a business asset as well. Intends to retain and use the warehouse until she sells the business in 5 years' time. Okay, so eventually he will sell the business, or what we can say in terms of taxation, she will seize the business, and up with that business she'll also sell the warehouse. Now, when the warehouse is anticipated to have increased in value, so after 5 years the warehouse value will increase. The other information relates is this Spydra prepare accounts to 30th June each year. It is owned by 55% by Akil and 45% by Basir. So I now know who Basir is. He is the other shareholder of Spydra Limited. Basir is not connected to Akil and neither a director nor an employee of the company of Spydra Limited. Okay. From this point, if you guys remember that in the requirement they have asked me that Spydra Limited wants to give a motorcycle to Basir. So guys, do remember, if the person is only shareholder of the company, he is neither director nor an employee of the company. Normally, he is not entitled to any of the benefits or the gifts by the company. Why? Because the only way he can draw the money out of the company is in the form of dividends. Because if he would have been a director, he can take salary. If he would have been an employee, he can take salary, but he is neither of them. He's only a shareholder, so he cannot take salary. So to draw money out of the company, you have only two sources, that is salary or dividend. Here Basir is trying to get something, or the company is trying to give something to Basir, who is only a shareholder. Now, does anybody know that what are the rules that if the person is only a shareholder, not a director and employee of the company? Can anybody tell me in the question section? Carla Mois, I have seen your question that you are unable to see this question in the handout section. It is not available there because I am using the practice platform. So that's why you cannot download the question from there. If you want to see the question in a hard form, you can download it from the past paper section, but it will not be upgraded to the finance set. Otherwise, you have to use the latest Kaplan kit if you want to read the question. Mohammad Asad, a very good answer. It will be treated as a dividend. Why it will be treated as a dividend? Because whenever you try to get something from your company by deceiving HMRC that, oh, I'm not taking dividend, I'm getting a motorcycle. What HMRC do is that they have made an anti-avoidance rule. Anti-avoidance rules are generally made to counter the tricks of taxpayers to avoid the taxes. For example, if I want to buy a motorcycle and I'm only a direct shareholder of my company, if my company will pay me dividend, I have to pay tax on the dividends first, and then after that, using that money, I'll buy a motorcycle. Wouldn't it be better if I ask my company to buy a motorcycle and then gift it to me? In this way, there will be no dividends and there will be no dividend tax on that as well. So HMRC knows these tricks, and for that HMRC has made an anti-avoidance rule that whenever you receive anything from the company being a shareholder only, this will be treated as a dividend. So whatever the amount of motorcycle will be, it will be treated as a dividend. And there is a punishment to the company as well. The company will not be able to claim capital allowances on that because it is not an asset that the business has purchased to use in the trade. They have rather purchased and gifted it to the shareholder. Normally, what happens is whenever we purchase an asset for the business, it is entitled to capital allowances. Here, the HMRC is penalizing you in both ways. It will not be treated as a business asset, so therefore no capital allowances will be available to company. Number two, even if the company gifts it in the form of motorcycle to their shareholder, that is Basir, it will be treated as dividend. So company will not be realizing any corporation tax saving, as they'll not be able to deduct that from their profits. And Basir will have to pay tax on that, which he would have to pay if he have received the money in the form of dividends. So very good answer, Mohammed Asad. Now, if he would have been an employee or a director, then what would have happened? Then, like a normal employee, it would have been treated as a taxable benefit in kind in his tax return, and the company could have claimed the capital allowances as well. However, he must have to pay tax on that as well, because if it would have been added into his tax return as a taxable benefit, he has to pay the tax on that on his employment income. However, the company would have saved the amount of capital allowances that they have claimed on the motorcycle. But in this case, they're unable to do that. Akil, don't worry about the read the mind of the marker article. I'll share the link at the end of the lecture. The last 15 minutes are dedicated for your questions anyways. Okay. Now, coming back to the question, guys. Do remember that this is the requirement, this is the answer of the requirement C, so it will not be used in answer B anywhere. So let's talk about Spider Limited disposal of equipment, because this will help me in calculating the capital gains amount. Now, Spider Limited sold an item of fixed equipment for proceeds of 20,000 on 20 August 2021. The equipment had been purchased on 1st May for 65,000. Okay. It means its cost is higher and its proceeds are lower. So, have we realized a capital loss on that, guys? Answer me in the question section, please. As its cost is higher than its proceeds. Russia, the answer is no. The reason is that whenever you bought an asset that is depreciable in nature, that is depreciating in nature, always you get capital allowances from HMRC on them on their purchase. So you have already claimed the capital allowances on them when you have purchased them. So the decline in value from 65 to 20 is because of the depreciation, and the depreciation you have already claimed in the form of capital allowances. So HMRC will not gonna give you a double relief by giving you the capital loss as well. So do remember that whenever there is a asset that is depreciating in nature and you sold them or you sell them in a loss, capital loss is not allowable. That is the point I want to teach you here. So what will be its treatment then, sir? Its treatment is that we'll be look at that what is tax written down value, which is always nil, and we'll compare it to its proceeds, that is 20,000. Mohammed Asad, you're right. So we'll compare it with its proceeds. So ask if we compare it with its written down value means tax net book value, means cost minus tax depreciation. If its costs, oh sorry, tax written down value is nil and we have sold it for 20,000, in HMRC's view, we have sold it for 20,000 in profit. And if you have carefully studied the capital allowances topic, whenever you sell a depreciable asset higher than its tax written down value, it results in balancing charge. What balancing charge does is it increases your corporation tax. Why? Because it will be added into your income and you have to pay tax on that. So do remember that the examiner has tested this point, that does the student know that it is a depreciable asset and it does not qualify for the capital loss? Number one. The tax written down value of the Spider Limited main pool was nil, so obviously the written down value of this fixed equipment is nil as well. Rollover relief was claimed on the purchase of the equipment to defer a chargeable gain of 38,000. Now guys, if you remember about the rollover relief, it is mentioned in my notes. If I can take you there, it is mentioned separately. Rollover relief. So the rollover relief applies whenever one sells land building goodwill and reinvest their proceeds in the similar nature of the asset. That is, you must sell land building and goodwill, and out of the proceeds then you have to buy the land building and goodwill as well. Okay. Now there is a relief called rollover relief against depreciable asset. That is what we called holdover relief as well. So here, as the plant was depreciable in nature, so the gain was held over using the rollover relief against the depreciating asset. What happens is, against the holdover relief, that when I bought an asset, for example, I sell a land or a warehouse, let's say, and I've realized gain of 10,000 on that. I've invested all my proceeds to buy a new warehouse, so HMRC will not gonna tax me on that 10,000 gain. That will be, that gain will be held over till the point I sell that new warehouse. Whenever I'll sell that new warehouse, the gain of that new warehouse will be taxable, along with that old frozen gain will be taxable as well. So what will be happening in Akil's question now, that by selling this equipment, he will also have to pay tax on this chargeable gain that he has previously claimed rollover relief upon. So there'll be a tax on 20,000, and on top of that there'll be a tax on that 38,000. Guys, because Spydro Limited is a company, it is not an individual. So on both type of income, they'll be paying corporation tax. If it would have been an individual, on balancing charge of 20,000, he would have to pay the income tax, and on 38,000 he had to pay the capital gains tax. But in the case of company, the incomes will be clubbed and the corporation tax will be payable on both of them. Spydra Limited will use the after-tax proceeds from the sale of the item of fixed equipment to purchase the motorcycle which it will give to Basir. So I've already told you the treatment of with that what will be happening with the motorcycle of Basir. Now let's back to the requirement, and now let's solve the requirement, the one that is computational one. I have discussed that this gift relief will be available, and I told you the both reasons. Now with supporting calculations, let's check that what will be the relief that Akil will get if he sells the asset, and then what is the amount of relief that he will be, or what is the amount of tax that he'll be saving if rather than selling he claims gift relief upon that. So guys, whenever you have to answer a question, you have both options available. Word processor, you can write there if you want to for any part, and you have the spreadsheet available as well. So if you want to calculate something, you have the spreadsheet section available. I always prefer to use for computational part the spreadsheet, and for the written or theoretical part like part A, I will be using the word processor. So for part B, I will be using the spreadsheet. Now let's start with the tax saving. What I'll do is that I'll open the question side by side so that I can extract the information while solving the question. I'll open the scenario here. So what you can do is you can adjust your screen accordingly. From always the bottom right corner. So here I have this bottom right corner. In the form of spreadsheet, so I can move it here and this here. Now, if we can start solving the question. So I have to calculate the capital gains tax. So first I will calculate that what would have happened if the Akil has sold the asset. It has the proceeds of, let's just drag and resize the column, 62,000. And the cost, sorry, the cost is 62,000 cost, and the market value is 195,000. Now to calculate the gain, rather than me calculating myself, I can apply a formula, and for every time you have to apply a formula, put equals to sign first, then press either plus or minus, whatever you want to do. I want to minus this amount. 133,000 is the gain. Now today, no gain will be chargeable as they will be claiming the gift relief. So less gift relief. The gift relief will be 133,000. So today, chargeable gain will be 0. That is for today. However, if the Akil would have sold it today, he would have to pay 20% tax because he's a higher rate taxpayer that was mentioned in the question. So you can write here that if Akil would have sold the warehouse, he had to pay CGT on the disposal, that is 133,000 times 20%. So what you can do is, rather than manually calculating, is you can put an equals to, select the figure for which you want to apply or multiply, and then multiply it by percentage. Always put equals to, otherwise the spreadsheet will not take it as a formula. So you have to do that every time. So the amount of tax that Akil might have to pay is 26,600. Now, why I have not taken the uh, annual exemption out of that? Because it was clearly mentioned in the question that Akil and Damia uses their annual exemption every year. So what I'll say to them, that by claiming the gift relief, you guys will be able, especially the Akil, will be able to save 26,600 worth of capital gains tax. And what about Damia? Now, guys, do remember that whenever there is a gift relief involved, the amount on which I have gifted you, or the cost on which I have gifted you, becomes your cost. For example, Akil bought that warehouse for 62,000 and he has now gifted to Damia. For Damia, the base cost will be 62,000. Now, what is the base cost? Guys, the base cost is an assumptionary cost for the tax purposes that you use. It is not the actual cost. Why? I told you that you always have to understand the rationale behind the HMRC rules. The rationale behind this is that if the HMRC is allowing you the relief of the gift, for example, if I would have to sell that warehouse, and if I have to, I would have realized the gain and I would have paid the tax to HMRC. Now HMRC has given me the gift relief, so I'll not be paying any tax. So HMRC will not gonna collect the tax from me now. The HMRC will collect the tax from the donee now, who now has the asset. So whenever Damia will sold the asset, HMRC will keep the cost to 62,000, and whatever price Damia will sold that, HMRC will recover the capital gains tax from her now. So the loss of revenue will not gonna happen to HMRC. Why? Because they were supposed to recover the tax from Akil. They will now recover the tax from Damia because they have not allowed Damia to change the cost of their warehouse. So you will write there, and that part you can write in word processor, and you can do the calculations in word processor as well. How? You can put a table here. For example, in my case, 2 by 4 would have been ample. Why? Because I only had to calculate the gain. So I could have written proceeds here, then cost here, and then gain here. And then writing my, calculations of figures there, I could have deducted gift relief, and then I could have written the text beneath. So now, if I want to write, do remember that it sometimes get tricky and does not allow you to write anything below the table. That will not gonna happen in your actual exam, but this usually does happen when you're writing in these practice platforms. I'll delete this table and I'll write. So what I'll be writing is that the for Damia, base cost of the warehouse will be 62,000 whenever she sells the asset. She has to pay the tax on the value above cost. That's it. Now, Let's quickly read the requirement again. What they have asked, explain with supporting calculation the effect of gift relief and the effect on the total CGT liabilities. So I have told you that what will be the effect on the total CGT liabilities on of making the gift relief of Akil and Damia. Now, one thing is only left, that what will happen with Damia when she'll eventually sell the asset. And here I want to emphasize on one finance act change. Guys, can you raise your hand and let me know how many of you know that the name of entrepreneur relief has been changed in the finance act? Okay, many students know that the entrepreneur relief has been replaced with the business asset disposal relief. The name of the relief is changed, the criteria and the conditions are the same, and the amount has been reduced from 10 million to 1 million. It is especially for the students that are repeating the exam. For the new students, just remember that there is a relief called business asset disposal relief. It is always available when you seize your business and as a part of the cessation, you sell all of the assets along with the cessation. Now, what is the advantage of the business asset disposal relief? Whenever you sell the asset, all of your gain will be taxed at lower rate, that is 10%, regardless of if you are a higher band payer or a basic rate band. Regardless of your band, your gains will be taxed at the lower rate, that is 10%. That is the advantage of business asset disposal relief. It is specifically mentioned in my notes as well. I can take you to the notes. Business asset disposal relief, you can see that the criteria is that the asset must be owned for more than 12 months prior to disposal, and if the asset is sold as a part of the cessation, complete business should have been seized or sold. Here I can see that Damia is selling the complete business or intend to sell the complete business. So the question has clearly asked me the effect on both of the liabilities of Akil and Dami. I've explained the effect on the liability of Akil, that he'll be saving the tax because of making the gift relief. Now, all I have to do is I have to tell the examiner that what will be the effect on Damia's tax liability. So what you can say is that Damia will be able to claim business asset disposal relief as she will be selling the complete business, and therefore her gain will be taxed at 10%, and in bracket you can mention that the gain that was 133,000 will later be taxed at 10%, and her CGT payable will be 13,300. Now, guys, you don't have to write a detailed description whenever you'll be writing the answering the questions of advanced taxation exam. You have to be as precise as you can. As long as you have explained all of the parts, even if you have not explained that much, but your answer contains all the necessary parts, you'll score full marks. So here, by solving this question or this part till now, I have told you few adjustments: the gift relief, the conditions of the gift relief, the business asset disposal relief, and what happens if something is transferred to company by company to someone who is not a director or an employee but only a shareholder. So in the last part of the requirement, I have to explain with supporting calculation the after tax proceeds which will be available from the sale of the equipment and tax consequences for both Spydra and the Basir. I have explained the tax consequences to you, that the motorcycle will be treated as dividends. So these are the tax consequences, and Spider will not be able to claim the capital allowances, and Basir has to pay the tax on dividends. So this is the second part. Always remember the rule of and. Whenever there is an and, there are two requirements. One is before the end, the second is after the end. Now, the first is that explain with supporting calculations the amount of after tax proceeds, which are not tough calculation, very easy calculations, that we can clearly see that there was a chargeable gain that was held over, that became chargeable as the result of this, and that gain was 38,000, and there was a balancing charge. Both of them will be added. Chargeable gain 38,000 and balancing charge 20,000. Total will be 58,000 total income. 58,000. On 58,000, the CT will be 58,000 times 19%, that is the rate of corporation tax. And let's see what is the amount. 58,000 times 19%, that is 11020. So the after tax proceeds that will be available are the gross amount, that is 58,000, or rather the amount that would have been received by the uh, by selling the motorcycle, the equipment, that is 20,000. Out of that, you'll deduct 11020. So the remaining amount is 8980. Guys, I want to ask a question here. Why I have not included balancing, chargeable gain in after tax proceeds? Why I have only taken the balancing charge amount? Can anybody answer me? Why the chargeable gain has not been taken into the calculation of after tax proceeds? No, Jala, but for the section B questions, I'll prefer that you use a word processor, because you have the ability to insert the table in between if you have to, and most of the requirement answers will be theoretically. Yes, it will be saved automatically. For example, if I show you here, if I cross it, and if I again want to open this, it will be saved automatically. Even if you end the exam, or there is a fluctuation, your laptop battery runs out, or the browser gets stuck, whenever you will open it again, it will be saved automatically. So that is the good part. You don't have to save it. uh, Shireen Merchant, as proceeds need to be taken. Yes, Bhaviksha, your answer is right, because I have received the proceeds of 20,000. The gain was not actually in the form of cash. It was a gain that was chargeable due to the rollover relief being chargeable now. It is not the actual cash that I have received. The cash that actually I have received is 20,000 that I have received by selling the plant. So that is why you only take proceeds to calculate the after tax proceeds. Yes, Ujala, that's why I have told you to use a word processor, because majority of the answer includes description. Only a smaller bit of the answer is related to the calculation. So you can use the Word format, or you can, if you do if you you can use the tables. If you do not want to use the tables, just quickly write them as if you would have written on the paper. But use word processor for the requirements in which you realize that the explanation is more necessary. And guys, do remember, the most common mistakes that the student make after passing the taxation exam, and they appear in the advanced taxation exam, they treat it as a computational paper. They just do the calculations, and examiner hates this most. They do not give you the numbers for the computations only. The computations are not worth that. The planning, the description, worth more marks. So you have to explain that what you have done. Why? Because you remember that I have said that the client is sitting in front of you. Imagine that if the client is sitting in front of you, you both are not allowed to talk to each other, and the only source of communication is the paper, let's say. So what he'll do is, he will write his question and will give it to you, and you will write the answers and will give it to him. Now, what you'll try to do is, you'll try to explain the answers in such a way that he does not has to ask you. For example, if you solve the competition and return him the paper, he's not a ACCA student or advanced taxation student. How he'll be supposed to know that what you have calculated? You have to explain what these calculations are. You have to explain that, okay, this is the proceeds, this is your cost, this is your gain. Now this is the amount of tax that you have to do it. Explain your computations. So that tip will be the most helpful for you. Imagine that the client is sitting in front of you, and the only source of communication is your this Excel sheet or word processor. So do remember, if you'll consider him an ATX student, the examiner will not give you marks. So guys, with that, I have finished our first question. I have to spend some more time on the first day question, because I wanted to teach you about the practice platform, about how to use my notes, about how to read the requirements, but I'll not be spending that much of time on the next question. So if I request all of you to raise your hands if you have understood this question well and it was helpful for you. Raise now, please. Raise again. Okay, guys, I hope that this lecture will be more useful for you by the end of it. So I'll take a 5-minute break before I start the next question. And after that, in the start of the question, I'll first answer if any of the questions are unleft or unanswered. Then I'll start the next question. You guys are allowed to post your questions in the break. I'll answer them after the break. Okay, students, we are back. So let's start our next question. That question is Max. It is from March June 18 attempt. It is available in the handout section. You can download that question. You can also find that question in Kaplan exam kit under the capital taxes section. It has a similar requirement to the one that we have done before with few changes here and there which we'll discuss. And again, you can see that it is a corresponding question. Akil and Demia was tested in September 18, and immediately before that, this question gets tested in the exam. So, guys, before I move on, if all of you can raise your hands, please, and give me a go ahead. Okay, guys, let's read the requirement. Advise whether or not CGT gift relief will be available, and if so, to what extent. Again, the same requirement, but there they have not given us any hint. If you remember in Akil, they have said that explain them why the gift relief will be available. Here, he is asking us whether or not. So we have to study the question and check whether the conditions are fulfilled of this gift relief or not. If yes, then it will be available. Otherwise, no. Advise max of the potential IHT liability and in circumstances in which this would arise. So do remember that we have to tell him the maximum IHT liability as well. Apart from our advice, we have to tell him the maximum potential IHT liability. Now explain the effect of max period of living overseas on UK resident status for all relevant tax years. So this part of the question deals with the resident status. Now, resident status questions can be set on the income tax resident status and the CGT resident status as well. Do remember that there are different rules for each tax. For example, if you want to check that whether the person is resident for income tax, the rules are different. The rules are different for CGT residency and the rules are different from IHT residency. So do remember that the rules are different for all the types of taxes. Now, explain the effect of max period living overseas on his UK resident status for all relevant tax years, okay, and advise him of the CGT consequences on the of the sale of warehouse in June 21 or alternatively in June 22. Whenever he gives us two options that tell your client what will happen if he sells in this time or that time, always think that what are the normal advantages of delaying the sale? Is there any relief that will be available in the future? Will the lower rate of tax will be applicable in the future? For example, if it is mentioned in the question that the client expects a lower income in the coming years, it means that we might, if we are higher rate taxpayer, we may be a basic rate band taxpayer. This can be a one potential advantage. Then the third is the availability of any exemption which may not be available today but will be available in the future. So these are the points around which you have to thought whenever the the examiner asks that tell the client whether it is feasible to sell on this date or on this date. Now note, no calculations are required for this part, so we'll only be advising the client. In part C, explain whether or not BADR, that is business asset disposal relief, will be available on the sale of the machine. Okay. And calculate the increase in max after tax proceeds if we sell in June 2022 rather than in 2021. Okay. So part C's calculation are actually B's part calculation are actually tested in part C. That's why the examiner has asked us not to calculate in part B, because he has asked the calculations in part C. Now let's read the question and let's see. Max is trading 2 years ago and is now about to move overseas. It means he is currently in the UK, is about to move overseas. It is a point to be noted, guys. He would like advice on the capital gains tax CGT implications of the disposal of two assets previously used in his unincorporated business. Okay, so if the assets are previously used in unincorporated business and he has now seized the assets, he may be able to claim the business asset disposal relief. However, guys, let me tell you one rule here. The condition is that if the business has been sold, if the remaining assets are sold within 3 years of the cessation of the business, BADR, business asset disposal relief, that was previously the entrepreneur relief, may be available. So we have to check that when he is planning to sell the assets. It's already been past 2 years since he has ceased trading, and now he's about to move overseas. Max, he's always been UK resident and domiciled, is widowed and has one daughter, Farah. He's a high rate taxpayer, so when we'll be calculating the tax calculations, we'll multiplying it by 20%. It is an important point. It's a high rate taxpayer. Makes disposal each year to use an annual exemption again. Will not be considering annual exemption as they always use it. Has made previous one-time gift on 6 May 2018, which resulted in a cross-chargeable transfer of 194. Guys, I always tell my students that whenever in the question the examiner tells you there is some sort of IHT included and he tells you that the person has made one lifetime transfer just a few years ago, always think that the most important implication of making that transfer is that it might have used his or her nil rate band. And if it is a pet, then when the person will die, this transfer will use the nil rate band first and then the transfers after that. So as in this case it is a pet, he has gifted it to his daughter. In that case it is a pet, so the implication for that is whenever the max dies, this transfer will use the nil rate band first and then any other transfer after that. Now, Max unincorporated business. Max operated as a sole trader for many years but ceased trading on 31st May 2019. Guys, do remember this date because we'll be looking that when he's planning to sell the assets. Because the date is dependent on the availability of business asset disposal relief. However, before reading the question first, I can answer to the first requirement, that whether the gift relief will be available or not. So you can say that he will be eligible for the gift relief because he has seized the business recently. However, the portion of the gain that will be available will be restricted to till the date from which he has owned the assets till the date of the cessation of the business. I told you in the last question that if the person sells the business and after selling the business the asset are not being used for business purposes, that period will not qualify for business asset disposal gift relief. So for gift relief, you know that in the last question we have discussed that if the person gives something that has been previously used in their trade but now it is not being used in their trade and they now want to gift this thing to someone, they have to time apportion it. So later on in the proposed gift of the office premises, we will be able to learn more details about that of the gift relief part. Max still owns the office premises and warehouse which he had been exclusively in his business until 31st May 2019. Okay. Max now wishes to dispose of these buildings prior to moving overseas. That's fine. Proposed gift of the office premises. Now that's the data that relates to part A. Max is proposing to gift the office premises to Farah on 30th June 2021. Okay. Max acquired the premises on 1st April 2013. Now, from 1st April 2013, he has used the asset till 31st May 2019 exclusively for the business. But since then, he has not used the assets for the business purposes and they have been there either being unused or at least not used in the business purposes. So what you should know is that even if you are unable to calculate the exact months, you will be able to score full marks if you just mention that the gift relief is available as the conditions of the gift reliefs are being fulfilled. The asset was being used in the business, and now it is being gifted to the someone related. However, gift relief will only be available up till the extent till when the asset has been used for business purposes. That is from 1st April till 31st May 2019. Any gain that is above that amount will be taxable. If even if you mention that you are unable to calculate the exact months, you will still score full marks. Now, so first part is done. You've explained them that from which period to which period you'll be able to claim the gift leave, and on top of that, are you able to claim the gift leave? Yes, you can. Then till what date? That I have mentioned as well. So part A is done. Part B, if I remember correctly, advise maximum IHT liability and the circumstances in this which would arise. So we'll have to read the question further. Since 1st July, the premises have been let to an unconnected company. The market value of the premises is 160, which exceeds the original cost. So that relates to the gift. So that part we have dealt. Now, Max move overseas. Max has decided to move overseas for a period of 2.5 years, commencing on 1st November 2021. Max does not intend to return to the UK at all during this period. Max will return to live permanently in the UK on 30th June 2024, and Max is not entitled to use the split year treatment. So it means if he is not entitled to use the split year treatment, I then have to use the ties test. If you remember, guys, in the exam you are given the table called ties table, and in my notes I have specifically mentioned the topic called overseas aspect of individuals, from where you can understand that when a person should be treated as a resident for the income tax purposes. This is the overseas aspects of capital gains, and this is the overseas aspects of individuals. Both are given or mentioned in the notes. By studying the relevant section from the notes, you'll be able to understand. I've tried to explain in a very simplified format. Okay, now coming back to the question, let me confirm that from which point of view I have to tell him his relevant status. From his CGT consequences point of view, I have to tell him the resident status. Now let's get back and read the question. As Max in year 21-22, that starts from 2021 and ends at 2022, lived in the UK for more than 6 months, because from April to November he was in the UK, it means he will be treated automatically as a resident in the UK from income tax purposes. But why will be looking at income tax purposes? Shouldn't we looking at from CGT purposes? That is the common mistake that student makes here, guys. I'm telling you again and again that we have to advise him for his CGT purposes, his residence status, not from income tax purposes or perspective. So let's visit the note section and see that when an individual becomes a resident or non-resident. Okay, it share here that whenever individual is a UK resident domiciled and he sells something, it is chargeable. But if it becomes non-UK resident, then it's exempt. Now, how will be able to determine that whether he is a resident or non-resident? For that, you'll be using the test that you use for income tax, that are the same ties test. So for income tax and overseas, the test will be the same, but the criteria will be different. What is the difference in criteria? That I'll explain in a bit. What happens in income tax is if you are a resident and you earn something from UK, you have to pay the income tax. If you become non-resident, but you're still earning something from UK, you still have to pay the income tax. For example, if I have a house in UK and I've let it on commercial purposes, so I'm receiving rent from there, and and I'm living in London right now. So the rent that is received to me is taxable because I'm living in the UK. I am resident for income tax purposes. But now let's say I come back to Pakistan, but the property is still there and still receiving the rent. Now what? I am I became non-resident for tax purposes of income tax, but I'm still receiving some income from the UK. It is still taxable. For income tax, if you earn something from UK, regardless of your resident status, it will be taxable in UK. If you earn something from UK, you have to pay tax in UK. As simple as that for income tax. But that is not the case for CGT. For CGT, if you are living in UK and you are resident, you sell something, you have to pay CGT. If you are a non-resident and you sell some UK asset that is situated in the UK, you may not have to pay any CGT. So now what people try to do is to deceive HMRC. For example, if I am planning to sell my house and I calculate and I anticipate that there's a good amount of gain that I'll be realizing on that house, what I'll try to do is to avoid tax. I'll go to Pakistan, live there for some time, sell the asset that is in UK, and claim HMRC that look, I am non-resident. I'll not be paying any capital gains tax because I'm non-resident. And after a few months, I'll come back to UK and become resident again. To avoid that, what HMRC does that is HMRC made an anti-avoidance rule called temporary non-residence of for capital gains tax purposes. It means that if you have any asset that you have purchased when you were resident of UK, but you have sold that asset when you were non-resident of UK, the HMRC may apply chargeable gains tax on that. In what conditions, in what circumstances? If the person, after selling the asset as a non-resident, becomes resident again within 4 years. So if I sell an asset that I have bought as a resident, but when I sold it, I was a non-resident, and I become a resident again within 4 years, the chargeable gains tax will be applicable in the year in which I become resident again. But what if I continue as a non-resident even after 4 years or 5 years or 6 years? Then there'll be no chargeable gains tax. So if you sell something as a non-resident and you come back to the UK after more than 4 years, then there'll be no CGT. So that is the point that we have to remember here, because Max is going to sell some asset. He then plans to remain non-resident for like 2 3 years and then coming back and becoming as a resident. So that is the main reason of solving this question, to teach you the resident and non-resident status of income tax and corporation tax and what are the tax implications for that. So before I move on and tell you the answer, if you guys can quickly raise the hand that have you understood that what I've tried to tell you. Okay. Guys, every time I told you a rule, I always try to explain the HMRC's rationale behind that, because it is a tax planning paper. And when sometimes the clients are sitting in front of me, they often ask me this question: "Oh, why HMRC wants to do that? Why do they want that? I mean, why have they made this stupid rule or something like that?" I then have to explain them that what HMRC is trying to do here. That's why all of these rules are called anti-avoidance rules. Now, let's get back to the topic. So what is happening here, that Max has decided to move overseas for 2.5 years in tax year 2021. So do remember that in tax year, sorry, in 2021-22, because he's moving on 21 November. So the April after that will be April 22. Whenever I have to identify that this date falls in which tax year, I always see that what is the following April. For example, for 1st November 2021, the following April is April 2022. It means this tax year is 21-22, which means that starts from 21 and that ends in 22. Now, for tax year 21-22, he will be a resident. Why? Because he has lived in UK for more than 6 months. So that's why he has automatically become resident. Now you guys know that there are three sorts of ways in order to make someone resident or non-resident. Either he automatically becomes resident, either he automatically becomes non-resident, or you have to check with the ties table that whether he's a resident or not. So here I can see that he is automatically resident in 21-22. In 22-23, as he does not intend to return to the UK, so he'll automatically become non-resident because he's absent. In 22-23, again he is not in the UK because he's planning to come back on 30th June 24. So in that year he'll be treated as a non-resident, and then Max will return permanently in the UK on 30th June 2024. Now guys, can anybody tell me that is he coming back within 4 years? Is he coming back within 4 years? In my opinion, guys, he is coming back within 4 years, which means that on his arrival to UK, the CGT will be applicable on the capital gains if he tries to sell the assets while living overseas. If he sells the asset by living in the UK, it is obvious that he has to pay the tax on that. But if he plans that, I'll sell the asset when I'll be a non-resident, and he comes back as per his plan in 2024, he has to pay the CGT. Now, you guys will be like that, sir, if someone has gone, how will HMRC will came to know that he's back? Guys, everything is automated nowadays. Wherever he uses his card, he uses his passport to check in into the country, or anything, any document he used anywhere, HMRC will be notified that this person is back in the country. And HMRC has quite efficient softwares nowadays that can identify the uncommon patterns themselves and send the client a notice that you have to answer that these are the discrepancies we have found in your record. So don't worry about HMRC. HMRC knows how to tackle these things. What you have to mention here is that in the second part, you have to tell that for the CGT purposes, Max is a resident in tax year 21-22, but in the next 2 years, he'll be non-resident as he will not be in the UK and will follow the automatic non-residency test. However, in 2024-25, he'll be back, so he'll automatically become resident. And if he sells the asset in the period of non-residency, the gain will be chargeable when he'll back to the UK. However, if he sells the asset while being a resident in the UK, he has to pay the tax. So either way, he has to pay the tax anyways. And the examiner has clearly told me not to use any calculations in this part. So I have not used any calculations in this part. Now, part 2 was also asked. I forgot to explain you regarding the part 2 that asked about the IHT implications of the warehouse. So guys, business property relief, that is BPR, is normally available when you share either the assets of a complete trade or you give the shares of a business to someone. In IHT, it applies or it qualifies for a business property relief, which means that if the person who is giving the assets or the shares dies within 7 years, the donee does not have to pay any inheritance tax on that. But again, the criteria I told you is that either you transfer the shares of the business if it is a company. If it is an unincorporated trade, means it is not a company, it's a sole proprietorship or partnership, then the complete trade needs to be transferred in order to claim the business property relief BPR. However, what is happening here? Only one asset is being transferred to FARA, that is office premises. The trade has already been seized, so there is no way that he can transfer the complete trade because he has already seized it. It means that the BPR will not be available here. Why? Because the BPR is only available when the complete trade has been transferred to the person. So what we'll suggest in the second part, that the availability of BPR will not be applicable on the transfer of the warehouse, as the BPR is available upon the complete transfer of the unincorporated business, not the single asset. But you remember that he has asked us that what is the maximum IHT liability that he would have to pay. So the maximum liability that he would have to pay is, let's see what is the value of the premises. It is 168. Now, if he transfers that to Para, it will be treated as a pet. And for that, we can use firstly two lifetime exemptions, that are annual exemptions. For current year and previous year, 3,000 each year, that will be deducted from 168. So we're left with 162. Now 162 will be locked, and the maximum tax that he might has to pay is 40% of that. However, we know that there is some nil rate band available, and to check that, we can see that part, that Max has made only one lifetime transfer, that is worth of 194. So out of 325,000, that is the value of nil rate band. I'll deduct 194,000 to check that what is the amount of nil rate band left for this transfer. It is 131,000. And out of 168,000, deduct two annual exemptions, 6,000, 162, then I'll deduct 131,000 of nil rate band. Assuming that Max dies within 3 years, there is no taper relief because he has asked me for the maximum tax. That is 31,000. And 31,000 times 40%. So 12,400 is the maximum amount of tax that Farah might have to pay, if considering that Max dies within 3 years, there is no taper relief available. The maximum amount of tax is 12,400. So I've answered both bits of the question. Whether the BPR is available or not, the answer is no. I've explained the reason, and what is the maximum IHT that Farah might have to pay, I've told that as well. Now, B part we have done, that what are the consequences of residency. Now let's explain whether business asset disposal relief will be available on the machine. You remember by reading the question that the machine was used by Max in his business, which he has now seized. And I told you in the last question that if you have seized the business and you want, but you have kept the assets, and you want to claim the business asset disposal relief, you have to sell those assets within the 3 years of the cessation. Now, the date has been mentioned in the question of cessation. It is 31st May 2019, which means 3 years from that date is 31st May 2022. If he sells those assets before 31st May 2022, he'll be entitled to business asset disposal relief, which means all of the gains will be taxed at 10%. Otherwise, it will not be taxed at 10%. Now, he has asked me that what will happen if I sell the asset in June 2021. I will explain that you will qualify for business asset disposal relief and the gain will be taxed at 10%. However, if he sells the machine in 2022, it will not be qualified for business asset disposal relief. Rather, it will be taxed at 20%, assuming that there will be no capped annual exemption available. Now, we have the cost available, we have the proceeds available, or the expected market value available, so we can make the calculations, because in this part we are supposed to calculate the max after tax proceeds as well. So in both cases we have to calculate the tax, the proceeds will remain same, and with that we can calculate the after tax proceeds. So what I'm going to do is I'll split my screen half and half, On half screen, I'll open the question, and on half screen, I'll open a spreadsheet. Now, I can see that the cost of the machine is 72,000, and Mark has an offer of 84,000 if he sells the machine in 2021, and an offer of 90,000 if he sells in June 2022. So I'll make two columns, that is June 2021 and June 22. Proceeds will same, cost will be the same. Sorry, proceeds will be the change, however cost will be the same. 72,000 in both scenarios. However, in one scenario, the offer is 84,000. Other scenario, the offer is 90,000. Now I can put a formula that equals to this minus this is my gain, and I can copy that formula with Control C, Control V. The Excel will automatically copy this formula. That will happen in your practice platform as well. You can try there as well. So I've tried to create an environment like practice platform for the question that are not available in the practice platform. So I'll suggest you to do the same. You can either scan the question or take a picture from your mobile, and on your laptop screen, view that question in a split screen. Half screen can be spreadsheet or word processor, half screen can be a question, and then you can start practicing. Again, guys, I cannot emphasize more that please try to practice the question on spreadsheet. The exam is CBE for the first time. Many of you may struggle, especially the repeaters that have appeared in the paper format of the exam. So please try to practice as much as you can. Now, all I have to do is apply the CGT rates. CGT at the rate 10% and 20%. Why? Because in one case, the business asset disposal relief is available, and in other case, it is not available. So in this case, it will be this multiplied by 10%, and in this case, this amount multiplied by 20%. To claim the tax savings, I can deduct both amounts. 2,400. We will suggest Max that if he sells the asset in June 2021, he will be subject to lesser tax because of the availability of the business asset disposal relief. However, if he sells the asset in 2022, 2,400 worth of tax will be more tax bill he has to pay. Now let's talk about the after tax proceeds. It is easier. Let's take proceeds less tax. I will copy the same formula here and write this, that these are the after tax proceeds. You can always adjust the width of your column in practice exam as well. That is why I'm again saying play with practice platform, spreadsheet and word processor, so you can learn as many functions as you can to make your life easier. Now I can check the difference between two proceeds. 3,600. So if he sells the asset later or earlier, the difference in the proceeds will be 3,600. In which option is he getting the more money? If we just look at from tax perspective, it is better for him to sell in June 21. But if we see it from the after tax proceeds perspective, it is better for him to sell in June 2022. And in the question, he has asked us that in which option does it result in higher after tax proceeds. So I'll say that he should delay the sale till June 2022. Even if he will be unable to get the business asset disposal relief, he will be able to secure higher amount of after tax proceeds. So guys, in this question, I have again tried to teach you certain topics, that is the resident status, again the different aspect of the capital gains tax and the business asset disposal relief. Then I've also tried to explain that what is BPR, and with that I have tried to sum up another question of capital taxes. So if I may request that all of you can raise your hands which find that question helpful. Please raise your hands again. Thank you. Thank you. Okay, guys, let's have a 5-minute break as well. Then we'll do our last question, and then we'll have a 10-minute question answer section at the end. Guys, I'm not receiving ample amount of question in my question box. I'll encourage you to ask as many questions as you can to make the most of this practice to pass webinar. Now am I getting some questions? Okay, guys, can a student be weak in tax knowledge still pass ATX? Very no. The thing is that it is a prerequisite of advanced taxation exam that you must have a TX knowledge. But if you are a student who has received an exemption, that is not an issue. If you read the complete syllabus of ATX, it includes the TX part. So if you are thinking that, oh, I have to read the TX book first, then the ATX book, then I'll be able to pass, that is not the case. Even if you just cover the ATX syllabus, you will obviously cover the TX syllabus as well. Uh, Rajaram, the single sheet cannot be used, and the thing is, you do not have to use it. Every time you'll switch, when you'll use a practice platform, so you'll came to learn. Then, whenever you switch a question, click next. The software gives you a new sheet of Excel for every new requirement or every new part. So you don't have to use the same sheet. You can use the same Excel sheet or the word processor for the same question but different requirements, but not the same Excel sheet for all of the questions. Yes, Shari, it is pretty easy to work or to study if you have 4 weeks, and even if you're working full time. What you have to do is just daily try to solve 2 to 3 questions from the exam kit. And whenever you solve a question from the exam kit, read its answer carefully. I'm talking about Kaplan exam kit. Read its answer carefully and try to make notes from the answer. And when you'll be appearing for the paper, before opting for paper, just read your notes that you have built from the answers. If you do not have the time to read the complete book, try to solve as many questions as you can, and then work on your technique when you were sitting in the paper. Guys, I've seen many students in my life that have a mediocre textbook knowledge, but they have a strong exam technique and they have easily passed the exam. However, on the other hand, there were paper with their students with wonderful textbook knowledge, wonderful concepts, but they were unable to convey that knowledge through paper and now computers. So the examiner is not sitting in front of you. The mode of communication with examiner of yours is either the paper and now the computer. So do remember that if you do not know how to convey the knowledge through computer, your knowledge does not worth it. Akil Hussain, no, you're not gonna lose exams for incorrect spellings. This is a computational exam. Examiner will not be deducting any marks for the spelling mistakes. So Sherry, I will suggest that it is doable. Try to work hard as much as you can and try to solve as many questions as you can from the Kaplan kit. Any more questions, guys, before I move on to my last question? Okay, guys. So let's move on to the last question for today. It is CARDA. It is a December 14 question, a very good question that teaches us some crucial topics of IHT and CGT. So as always, let's read the requirement first. Explain the IHT advantages other than lifetime exemptions. So do remember, whatever we are talking about, we are not allowed to talk about lifetime exemptions. Explain the inheritance tax advantages other than lifetime exemptions, which would have been obtained if CARDA had made additional lifetime gifts of quoted shares between 1st December and her death. So guys, for that, even without reading the question, I can answer this question if I have done ample amount of practice of past exam papers. Now, if you have practiced, this question has been asked numerous times in past paper, that what are the advantages of making additional gifts in your lifetime. Now, being a person, there are two ways one can transfer something to someone. The first is when they are alive, they can transfer something to someone in their lives. It will be treated as pet as far as the IHT is concerned. I'm not going to talk about CGT perspective right now. The second is that you can transfer something to your will to someone, but that is what we call transfer at death, because your will be announced by your solicitor on your death, and then the people will came to learn that who has been transferred what. So there are two ways one can transfer from the IHT's perspective. The one is lifetime gifts, and the second is through will. Now, every time you read a question, you will came to learn that it is advantageous to make more lifetime gifts, advantageous to make more lifetime gifts. But what are the advantages? The first is whenever you transfer something to someone, it can its value gets locked on that date. So, for example, if I am alive and I transfer something to someone today, the value for the IHT purposes will be locked today by HMRC. And if that asset is appreciable in nature, all of the increase in the value after today will not subject to IHT. That's why people try to suggest that try to make additional gifts or as many lifetime gifts as you can, so that their value is locked and any increase after the transfer will not subject to IHT. So that is one advantage that you can discuss here as well, because it is not a lifetime exemption. The second advantage is that, as you guys know, that if the individual manages to live more than 7 years, the transfer will become exempt and there will be no IHT applicable on it ever. So if you're alive and healthy, try to transfer the gifts in your healthy life so that if you manages to live more than 7 years, there will be no IHT ever. Do remember, the IHT law is always borne by the donee because the IHT is applicable when the donor dies. So that when the donor dies, obviously he cannot, come out of the grave and pay tax. So the tax needs to be paid by the donees to HMRC. So do remember that the IHT is a tax that is always paid by the donee only in certain circumstances, that is the trust, and in trust case even if the donor elects to pay the first installment. That will cover later. However, I told you the one advantage that the value gets locked and any increase in the value after that date will not subject to IHT. The second advantage is that if you manage to live more than 7 years, it will be exempt completely. If not, even if you manage to live more than 3 years, the taper relief will be available and it will help you to reduce your IHT. The third is that if you manages to live more than 7 years or more than 3 years at least, and if you have any nil rate band available, that nil rate band can rescue you and will help you in decreasing your IHT liabilities. Do remember the 4 marks does not necessarily means that you have to write 4 points. It can either be well explained 2 points and you can score 4 marks. So don't get trapped by this that for 4 marks I have to write 4 points and that too in detail. Even a precisely explained 2 points can score you good 4 marks. Now, let's talk about part B. Calculate the increase in legacy to the charity which would be necessary in order for the reduced rate of IHT tax to apply and quantify the reduction in the inheritance tax liability which would result. Now, do remember that the rate of IHT in all circumstances is 40% except one, and that is that if you leave a substantial amount of your estate to charity, a registered charity, then HMRC can give you this privilege that rather than 40%, 36% IHT will be applied on your estate. That is what we called a reduced rate of IHT. But that is the only instance in which a reduced rate is applied on your estate. Apart from that, in every other circumstances, a 40% IHT will be applied on your death estate. Now, here what we have to calculate is that how much charity would the person who has died in the question would have made that on all of her estate the reduced rate of IHT that is 36% would have applied. Now I will take you to my notes and there I have made a heading separately called reduced rate of IHT. If you click on that, you can study that how one can claim for the reduced rate of IHT. So there is a heading called reduced rate of IHT and this is a formula. I have told you that you should leave a substantial amount to charities. How you calculate that substantial amount? You add up all of your death estate, deduct your nil rate band out of that, and then normally when you calculate the IHT, you deduct the charities and residence nil rate band as well, and then apply 40%. However, to calculate that substantial amount, the formula is a bit different. After deducting the nil rate band, you add back the charitable legacies, which means the charity that you have given, and the RNRB, that is the residence nil rate band. And do remember, guys, the residence nil rate band amount for this year has been increased from 150 to 175. Do remember that. Apart from that, there is no substantial change in the IHT in this finance sector. So, what you will do is by taking your total estate, deduct nil rate band, add back RNRB, add back charities, and whatever the answer is, take 10% of that. That is what you call baseline amount. It is a benchmark. Now, if the 10% of that, what we call baseline amount, is equal to the amount of charity or lesser than the amount of charity that you have made, all of your death estate will be taxed at 36%. What do I mean by that? I mean by that the amount of charity should be higher than this baseline amount. If the amount of charity is lesser than the baseline amount, you will not be able to qualify for reduced rate of IHT. So your charity must be higher than this baseline amount, than this 10%. Now, in this question, we'll calculate this amount ourselves and we'll suggest the client that if this amount of charity had been made, the person would have qualified for the reduced rate of IHT. Now let's get back to the question. Explain the IHT advantages which could be obtained by varying the terms of CARDA will, and set out procedures required in order to achieve a tax effective variation. Now this is the topic of advanced taxation as well, called variation of will. In my notes, you'll find a heading called deed of variation. What does this mean? It means that even if a person has made a will and he has now died, his solicitor has announced that this is his will. If his descendants who, who has received the asset, all of them agrees that we does not agree with his will and we want to change his will. If each and every one agrees, even if a single person does not agree, they cannot change the will. If everyone agrees, they can change the will even after his death. But what is the procedure? There is a form that is available on the HMRC website. We are not supposed to know the name of this in our paper. However, there is a form that must be written and signed by all of the beneficiaries of the estate. And in that, you must have to prove HMRC that by changing the will, we'll be able to save the IHT. If by changing the will you are unable to save the IHT, you are not allowed to change the will by HMRC. So first, everybody should be agreed. Second, the tax should be reduced as a result of the change. Third, the will needs to be submitted to HMRC within the 2 years of the death of the person. Fourth, it should prove to HMRC that that was for the tax efficiency, that by changing the will you are able to uh, disperse the estate and IHT more efficiently. So these are the 4 conditions. Now do remember that he has asked us that what are the conditions. So these are the conditions that we'll write in the answer as it is. And now to relate it to the scenario, this requirement, see, I have to read the question. I can uh, answer even without reading the question. B, I have to read the question, and for C, I have to also read the question just to relate my guidance to the scenario. So Kada was domicile UK domicile, died on 20th November 2021. So she has died. The death of date of death is very important because you have to mention it. Kada is survived by 2 daughters, Raymer and Yang. Raymer has an adult son. Yang has no children. Now, Kada has not made any lifetime gifts since November 2017. Kada's nil rate band available at the date of her death was 220. So that is pretty easy that the NRB has been given to us in the question. We have not, we do not have to spend time in calculating the nil rate band. It has been already given to us. Kada's own assets valued at 1.1 million at time of her death. So the total estate value has also been given to us in the question. We don't have to calculate that as well. Kada left her house valued at 600,000 to Raymer. Whenever I am calculating a IHT question and I see a house in the estate, always RNRB, residence nil rate band, comes into my mind. Do remember that the criteria of residence nil rate band is that the estate should include a main residence. Main residence means that the person should have been living in that house. If it is a property that has been let out, it cannot be qualify for RNRB. So Kada left her house, obviously it would have been her main residence. The second is that its value should be more than 175,000, and it is more than 175,000 here. So it does qualify for RNRB. Even if the amount of the house is less than 175,000, you can qualify for RNRB but the RNRB will be restricted by the amount of the property. For example, if the property is worth 150,000, the RNRB amount will be restricted to 150,000 as well. You cannot deduct complete 175,000 if your property is below 175,000. Now, Kada left her house to Raymer, so it means that we have to deduct the RNRB out of the state as well. Do remember that the student sometimes gets confused that this house may be on top of 1.1 million in state. It is wrong. The estate valued at 1.1 million. All of the assets that are below are included in the estate. So Kada left a cash of 60,000 to UK National Charity. So she has left something to UK National Charity. Might be that was not enough. That was lesser than the baseline amount. Kada left her remaining assets, including portfolio of shares valued at 440 to Yang. None of the assets qualified for any inheritance tax reliefs. Otherwise, whenever I see shares in IHT question, always BPR comes into my mind, but the examiner has clearly told me that there are no IHT reliefs available here. Let's talk about Raymer now. He is not an accountant, but he has some knowledge of the UK tax system. He has made 4 observations regarding her mother's estate and inheritance. My mother should have made additional gifts in her lifetime. That was relevant to requirement A, so we have answered her this question that he is right. Her mother should have made additional lifetime gifts, and I have told the advantages as well. The tax rate on the chargeable estate should be less than 40% due to gift to charity. That we have to check. I do not intend to live in the house but will give it to my son on 1st July 2022. Guys, there is a very important point I want to tell you or teach you here. If your children are already wealthy and you are about to die, it is better to transfer the assets directly to your grandchildren. Why is that? Because it saves an IHT of one complete generation. If you transfer it to your son, when you die, your son has to pay the tax on that, provided you died within 7 years. Then when your son provide to your grandchildren, transfer it to your grandchildren, and if they dies within 7 years, your grandchildren has to pay the tax again. So within a short span of time, a same property will get taxed twice. That's why it is better that if your children are well and healthy, you can directly transfer the assets to your grandchildren. So yes, Raymer is right that uh, what her mother should have done is they should have transferred it to their grandchildren. But what they can do is, if he or if she and the other daughter can agree, they can change the will. That is what the fourth part is. My mother paid capital gains tax every year. However, when she died, some of her shareholdings had a value less than cost. Whenever I see any asset that is valued less than in cost in CGT, always a release come into my mind that is called negligible value claim. Negligible value claim means that if I have an asset which is not depreciable in nature normally, but due to some reason its value has fallen below the cost and I want to capitalize the loss on that, I can by submitting a negligible value claim to HMRC even without selling the asset. I have the asset and I just want to utilize its loss, I can by submitting a negligible value claim. So her mother would have submitted that claim. So she would have claimed that capital losses, and in the year of death if you have capital losses you are unable to carry forward. That's why HMRC always allows you to carry back. So Carter should have carried back against any capital gains the loss of that. Then there are quoted shares that are valued more than cost. It is a PLC shares. So what she would have done with these shares is she would have transferred these shares to any of the children during her healthy life. It would have been treated as a pet, and if she were to die within 7 years, these would have qualified for the taper relief. Now, unquoted shares on KZ Limited valued at nil. Obviously, on that she has to suffer losses as well. So she If she would have been alive, we would have suggested her to sell both shares, the FRPLC and the KZ Limited, and if she does not want to sell the shares, then at least submit negligible value claim to HMRC. By that, she'll be able to utilize the capital loss, and if she died, or if she were to die, her children can claim the capital losses against her capital gains and receive the refund from the HMRC. So now I'll submit, before I calculate the second part, that yes, they can modify the will if both are agree. They need to submit an election to HMRC. This must be by, if I compare with the questions date of that is 30th November, 20th November 2021. So within 2 years, they have to submit the deed of variation. That is 20th November 2023. They have to prove HMRC that it is for the tax efficiency purposes. If they satisfy all of the conditions, they can modify the will of CARDA. That is the answer of the third requirement. Now we're only left with the second requirement, in which we have to calculate that what is the amount of charity she should have made to charities to qualify for the 36%. So that I'll calculate with you guys. Again, I'll split my screen in two parts. I can make two columns. One is the current situation and one is that what she should have done. So currently, let's start with the state first. So the state includes house, cash, other assets. Or what I can do is I can start straight away from with 1.1 million, but it's better to write the assets. So 5,000 worth of house, 60,000 of cash, and then other assets of 440. If you prefer, like I prefer, the comma so that you can make sure that your figures are correct, always select the data and then just only press this comma button in Excel. It will convert all the figures in commas. Now, total estate is, I don't have to calculate. I can apply a sum formula, SUM sum equals to, and then add all of these figures. So it's 1 million. So it is same before. So I can copy all these figures and paste here. It is, I can write before here and after. Now, normally we deduct NRB out of that. NRB, it is mentioned in the question that the NRB that has been left is 220. All right, negative 220. Then you can write RNRB, that is 175,000. I forgot to deduct the charity she has made, so I can insert a column here and I can write charity here, less charity, which you originally made, that was 60,000. Now, what is the taxable estate on which IST needs to be applied? I'll apply a sum formula which will add and less all of the figures starting from there. What it will do is it will deduct all the figures from 1 million. So I'm left with 545. Now, to calculate the baseline amount, I have to open a working here called working one. Baseline amount is calculated as death estate after the nil rate band. So my estate is 1 million less NRB, that is minus 220,000. I'll take you to my notes again so that you can reconfirm the formula from the reduced rate. Less NRB, add charitable legacies and add RNRB. So let's get back. Add charities and add RNRB. Charity is 60,000. RNRB is 175,000. Now let's calculate the sum of that. Estate less NRB, add charity, add RNRB. Now we have to calculate the 10% of this amount. So equals to multiply by 10% of that amount. That is 1,051,500. We might have made some mistake. So we have to check that what is the mistake that we have made. Let's get back to the calculations. Here we can see that we have to add these figures to gross chargeable estate. Gross chargeable estate is also sometimes called as taxable estate. So the gross chargeable estate is this one. Now, what shall I do? Do I have to perform all of the workings again? Let's say if I'm sitting in the question and I've realized that I've made a mistake. Shall I have to perform all of the calculations again? No. All I will do is I will just change this figure 545,000 and all of my answer will be updated automatically. Why? Because the only figure that has been wrongly calculated was this one. I have then deducted NRB of 220, then 60, then 175. I always prefer that you straight away take the difference between the total estate that and NRB, and that is equals to 1 million less your NRB. Sorry, it is adding the because the formula has been applied. So let's add the figures manually here. I'll leave the NRB. I'll take the taxable estate directly. That is 75,000. Sorry, that is 545,000. So the estate is 545,000. Add charity in that, or add RNRB in that. Whatever the amount, take 10%. So that is the amount that should have been made to the charity as compared to 60,000. So what is the difference? This minus this. 18,000 is the difference. If the Kada would have made 18,000 more charity, whole of his estate would have been taxed at 36%. Now, as they are asking us that are we allowed to change the will, and we have tell them the method to change the will, we will be telling them that when you'll be changing the will, try to add 18,000 further to charity. In that way you'll be able to save substantial amount of tax. How they can able to save substantial amount of tax? Let's say if this would have been continued, they would have to pay IHT at 40%, and 40% on this 545 is times 218,000. But if the same tax is applied, for example, the charity is now 78,000. These both are the same, so I'll copy them to save my time. I will copy that formula as well, and I'll copy this formula as well. However, this time it is 36%. That is the difference. If she would have made more charity, how much tax she would have saved? As I always told you in the very start, always tell your client the resultant savings. So what I'll do is I'll take this less this, and I'll tell her that if you can make more charity, you'll be able to save worth of 28,000 pound IHT. Now, some students will ask, sir, to save that amount of IHT, we have to make at least 18,000 more charity as well. Still, if I deduct this less 18,000 that will go out of my pocket to charity, still I'll be able to save 10,000. So do remember that, guys, that the key here is to tell the examiner the resultant savings. Now, there are certain students that are very worried, sir, oh, this calculation includes a lot of steps. I mean, we are a human being. In the exam pressure, we might miss one step. What to do? Guys, do remember that ACCA follows an own figure rule. If you have made one mistake in some of the step or two mistakes, the ACCA will only deduct the mistake or marks of only those mistakes and then assume that the rest of your answer is correct. So each correct adjustment that you will score or do in the exam, you will score for that. Do not worry that you should be able to calculate the absolute answer even when you're practicing at home. Just make sure whenever you're looking at the answer, just make sure, just check how many steps have you done correctly. It does not matter whether your final answer is exactly matched with the exam standard answer. That does not matter at all. What matters is that how many steps have you correctly solved. With that, guys, our third question of the day has also completed. Now I will welcome all of your questions regarding the question today. But before that, I want each and every one of you for who has found that session helpful to raise hands for me. Thank you, guys. Now, if you have any questions, you can quickly post in the question box and I will try to answer them. Haris, the value is 1.1 million. My question is, the question that I have been I have posted there is there's a bit of typing mistake. I have forgot to update the house value as per the new residence RNRB. So the residence nil rate band has been increased and so has the question has been adapted to the latest attempt. So please let that typo error. Akhil, what is the best way, even if this session would not have happened altogether, the best way to pass the exam is to practice the revision kit, and revision kit. I can't emphasize more, and that too on computer. So that is the only best way to pass because the more amount of questions you solve, the more you'll able to get what HMRC try or the examiners are trying to ask from you. So the only way to pass these sessions will only gonna help you as to how you should approach the questions. That's what I am telling you. I I am unable to teach you the complete syllabus in 3 hours, am I? Can't. So that's why these are the sessions that have been designed to help you as to how you should approach the questions. What your target should be, that what I have done is, if you look at the Kaplan examination kit, it has certain sections. I have selected at least one or two questions from each section, and then I'll try to solve with you so that I can tell you that how you should approach the questions. Yes, Sherry, even if you were not working full time, instead you were a full time student, I have never recommended any of my students to solve 80 questions. All you have to do is you only have to solve the question that are above December 14. So many of the questions will be out of your list now, as you only have to solve the question that are December 14 or above in the Kaplan examination kit. Anything else, guys? Any more questions? Okay, guys, with that, we'll sum our today's session. Hope to see you tomorrow, and I hope that this session will help you in passing your exam. Sherry, every time you read a question, and if you are able to at least identify that from which topic it has been tested, just go to the notes, revise notes, and try to solve the question and assume that if it is an open book question, were you able to solve the question? If not, then it means that you have to solve more questions. So do read my lecture notes once, then start doing the kit, and every time you read requirement, go back and try to read that particular part from the lecture notes and try to read the answers. The examiner answers are even more helpful than my notes. And do remember, whenever you're reading the answer, never ever leave the tutor top tips or the tutorial note there or the examiner comments. Never ever leave them. These are the gems of the Kaplan kit, okay? Okay, guys, we'll see you tomorrow. Take care then. Bye.